So I said that at the end of the day, it satisfies, you see that it satisfies the two major conditions that you want to see price satisfy, right? Sweep of liquidity and break of structure, right? So done. So you see that, look at where price came back to, right? You can see that price did not still come back. This is an open close. This is an extreme key level that is resting here, right? This is also an A-shaped key level that is resting at this extreme, right? Somebody would have been waiting at all of these places, right? But if you pay attention to the most recent story that price is actually saying to you, right? Because 1 hour is already 1 hour and 4 hours already in sync with the daily, right? So you can see what price did. Tapped here once, it bought, it held, even closed above. The next candle bought. So we know that this key level held, but now it was disrespected with an impulsive move to the downside and then closed below it, right? So what price later came to do, right? It still brings us back. You can see that nothing changes. Nothing has changed. This is what we call the ABC setup, A, B, C, right? Price came back to take out the B, right? But at the end of the day, right, we just want to keep trading as simple as possible, reducing it to just one thing, right? We know that price seeks to do two things, right? Attack liquidity, rebalance, and hold imbalance. But we ask ourselves that question consistently: at what pricing level do we want to see price rebalance and hold imbalance? This is the pricing level here. A V-shaped key level that was tested once, that held, then got disrespected. You can see our price. You can see the healthy drop, right? You can see that healthy drop. So if you look at hold on, I want to show something. So if you look at it, look at where it started from. So if you look at it from the daily, right? This is the daily standpoint, right? This is the daily. So you can see price came back to this particular daily time, for this particular daily key level. So what did we see the first thing first? This key level that was already tested once, that gave to us all of this sale. Can you imagine all of these sales that happened from this A-shaped key level? Now price came back here, used this particular previous daily high as a what? Internal range liquidity. But that's not our business. We don't need to draw all of those things. This daily came here, tapped into this. The moment it tapped into this, you can see how it closed below, right? What did you notice? How this key level, how it started? The storyline started, the bearish storyline started from this key level, right? Look at where it ended here for that particular day, right? You can see this is what I'm trying to talk about. This is an open close. Look at this. But you can see after the open close, you can see we still retrace the bid and we continue to sell, right? So let's look at something like this. So let's pay attention to everything that happened here. So we have this open close and all. So if we move straight to the 4 hours. So daily rejected daily, and after daily rejected daily, what did you notice? Right? Look to the left, pay attention to the left. Daily rejected daily. If you move your chart to a line chart now, you can see what price did. 4 hours gave to us liquidity sweep break. I told you that many times if you don't see a liquidity sweep and a break of structure, you are going to see a breakout. So, but now we saw a liquidity sweep and a break of structure on the 4 hours. Daily rejected daily, then 4 hours swept liquidity and broke structure, right? The next thing you can see is where did this daily, don't forget, this is the daily key level, right? But this is where price came back to. Look at this. Look at this. So if you look to the left again, right, from where daily is coming from on the 4 hours, you can see we had multiple sweeps and break here, right? We had a sweep, we had a break, we had a sweep, we had a break here, right? So now our 4 hours is now in sync. You can see that the 4 hours is now in sync with the daily, right? 4 hours are swept liquidity and broken structure. So the question is, at what pricing level do we want to see price sell from? Look at this now. So let's investigate what happened here. Are you seeing now? This same 4 hour, right? This same 4 hour key level. You can see that the 4 hours created an A-shaped key level that is resting here with an engulfing. Normally, we should be expecting a deep retracement. But did he give to us a deep retracement? No, he didn't give us a deep retracement. Look at what price did. If we investigate, I mean, if you pay attention, forget about the laughs and everything that happens on the group. If you pay attention to some of the subtle gems that many of you dropped, right? Many of you don't know that what that person has said might be the truth. There was a time that Dixon randomly said, a week that is overlapping with on an imbalance on an higher time frame, it's a key level on the lower time frame that got disrespected. So look at this now. We have this particular week. Please mute your mic now. What's happening now? So if you look at these 4 hours now, don't forget where we are coming from. It's a simple process. Daily rejected daily, close below. We move straight to the 4 hours. right? When we move straight to the 4 hours, 4 hour gave to us a sweep and a break, sweep and break, right? With an impulsive move to the downside. Where do we want to see price now as an entry? We want to look for entry opportunities. Where do we want to see price come back to? This is a week that is overlapping inside of this 4 hour. This is a week that got disrespected. But when we move to the lower time frame, like 1 hour, 30 minutes, you can see that same week became a key level here. It's a V-shaped key level that was tested once that got disrespected. And that was where price came back to. Look at this. All of this entire move. All of this entire move. Now, if you see, why did we not continue to buy? We came here on the daily time frame. Let's look at this. Let me show you guys something. So the bearish storyline started from this A-shaped key level that was tested once. Price reacted, closed below, right? Then we had something like this. Price came back here, right? To this open close. So we sold from here down, came back here, all of this. So now let's go to the 4 hours. So this is the 4 hours now, right? So this is the 4 hours. You can see we came back to that same key level. And I said to us that for us to validate that a storyline has ended, to be sure that a storyline has ended, we must see a breakout to that particular direction, right? So this is that daily key level. Don't forget, this is the daily key level we marked out that price traded into. You can see all of these rejections that is happening. All of this rejection. Did you see anything like a breakout here? There was no breakout here. Look at this. Move to the line chart. There was no breakout. There was no breakout. The most recent breakout you have paying attention to is what has happened on the 4 hours. Liquidity sweep and break of structure. This is the most recent thing I was showing. But on the daily time frame, price traded to that open close. That open close on the daily time frame became an A-shaped key level that was disrespected. Am I right? Yes. But look at this. Did you see anything like a breakout here? Look at this. There was no breakout, which means that we are still bearish. The storyline is still bearish. So when we now investigate the storyline that is bearish, where do we want to see price come back to? Price wants to do two things: rebalance and hold imbalance, attack liquidity, right? This 4 hour candle now becomes our internal range liquidity, right? When we move to the 1 hour time frame, you can see the 1 hour time frame is showing to us that this is the V-shaped key level that we're supposed to use. But when we now refine it a bit to our last result, let's say the 30 minutes time frame, it made a lot of sense for us here because one, this is the V-shaped key level. 2 consecutive down candles to the downside created an open close. Price played the V-shaped key level. It held, but disrespected it. And you can see this. And this is where people make mistake. Daily rejected. The storyline started on the daily. This is where many people make mistake. Let me show you what I'm trying to say. Storyline started from the daily, ended at this key level here. Let's just say price came to play this key level here, right? On other brokers, price maybe came to this key level. 4 hours did not give a breakout. 4 hours did not give any breakouts, signifying that we are going to be bearish. But look at this. When you come to the 30 minutes, that is why you cannot build bias. If you are taking unnecessary losses, you cannot build bias from a lower time frame, right? If you want to build daily bias, right, you want to go in sync with what price is doing from the daily, the 4 hours, the weekly, you can't build from 30 minutes. Look at what 30 minutes is now showing to us. 30 minutes is showing to us that we broke structure. So what should you be looking for normally? You will come here and be looking for 30 minutes key level now. You look for 30 minutes key level. And the market has a way of showing you what you want to see. So look at what price did. Price created a V-shaped key level on the 30 minutes, right? In fact, it even did 2 consecutive candles to the downside, created an open close. So price broke above the open close, also engulfed. So what will you say? Let's buy. So you say, let's play. So look at what I said now. You remember? Danfodio, thank you for that. Your question again. It was an intelligent one. I told you that engulfing, after price creates 2 consecutive candles to the downside and it engulfs, it is going to be used for a retracement. It is not going to be used for a change of direction. How many of us remember when I said that when the first 2 calls, when Danfodio asked that question? So look at this. 2 consecutive candles to the downside created an open close. Price broke above it and engulfed. Look at this. It was used for look at this, retracement. The retracement came back to where? The 30 minutes open close. Came back to the 30 minutes open close. And look at this. The original direction was where price went to. Price went back to its original direction. But if you now want to now do a little bit of investigation, we can still use this one. This is an A-shaped key level that was tested once, price closed below it, but got disrespected. It was disrespected with an impulsive move, disrespected again with an impulsive move. So price came back to it and all of that. But just for context sake. Now, do you see what I'm saying? Danfodio, can you see the question you asked? Right? Where price? So you can see now, daily and 4 hours are in sync for a bearish bias. Why are you looking for buy? Why are you looking for buy? It's a whole lot of patience. For you to wait for your setup to form is a whole lot of patience. But if you're not patient enough, the market will show you what you want to see. Now it has showed us that it has broken structure on the 30 minutes. We'll now say, it broke structure. Which key level should I play? Now, the next thing the same person will do again. It will use this 30 minutes candle as internal range liquidity. So you say price wants to come and sweep liquidity, play out from this open close. Are you getting now? So he's looking to buy until this external range liquidity is taken. Price will pick him in only for him. Before he will take screenshot and post in the group, price has taken him out and gone to the respective direction. Why? I just explained to Ross when Danfodio asked that price breaking, you can see we did not get a breakout on the 4 hours, but we came to the 30 minutes. We are seeing, look at this, move to the line chart. We came to the 30 minutes, look at what we are seeing, sweep of liquidity and break of structure. But there was nothing like that on the 4 hours. So why are we selling? Why should we be buying? But look at what 30 minutes now showed to us. 2 consecutive candles to the downside created an open close, price engulfed above it. I told us that you cannot use it for change of direction, but you can use it for reversals. Tapped into it, impulsive move. You can see momentum kicked in for the retracement. And after price kicked in for the retracement, can you see this thing still going back to everything we said from the beginning? That if a storyline starts from the daily to end on the daily, if it starts from the 4 hours, it will end from the 4 hours. Now, a storyline started from the 30 minutes, open close that got disrespected, that got broken. It started there. Look at where it ended. It didn't end in a random place. That is what I'm trying to show you. The 2 things that I'm trying to show you on this 30 minutes is that, number 1, you can't use a break of an open close for a trend continuation, a change in storyline. You can use it for the reversal, which was what happened here. So if you cut the reversal here, you use this as internal range liquidity, cut the reversal, it makes sense. But where did you notice? Can you see now where the reversal stopped? The reversal ended. The reversal started from this open close that got engulfed. Look at where it ended, open close again. And can you see how price just continued to move to the downside? Are we learning? Yes, it's even a QM. Let me see. Is it okay? Somebody said he got the continuation. Say, yeah, beautiful. What else? Let me check. Since you said a key level that has been tested, we'll always hold on, bro. Or more now, waiting I use as entry whenever I don't see my bias for gold from that time frame. Yes, that's it. I've told us. I said not just gold. Go and study USDCHF. USDCHF is a gold mine. In fact, it was one of us that even opened my eyes to it, right? And there's this particular guy. I think his name is Olawale. He has just been last week. That guy almost murdered USDCHF, and he traded the same setup. So yeah, so now I will always talk about this thing. Price will give you reason to chop that loss. Yes, that's the thing. It will always give you reason. If you follow this 30-minute structure now, because you come and say, sir, price broke structure. 30 minutes candle was internal range liquidity. Why did I still hit stop loss? Look at it now. Come from the daily time frame. Open close. It's just documenting your thought process. Look at this. We know that on Saxo, yeah, price did not get here, but when you check other brokers, price go to the open close. But when you come to the 4 hours, did you see any breakout? There was no breakout. The most recent breakout you have is to the downside, meaning that we are going to the downside. Even if you not see this breakout here, this break of structure that we are talking about here, what about this one here? This is a structural low here. This one is a structural low. This is the breakout that happened here. Are you seeing now? That is the most recent breakout. So what are you looking for again? 1 hour time frame. Look at 1 hour. 1 hour gave to us a reversal for a breakout. But we are working with daily and 4 hours, right? It will always give you something to always want to see. It will give you what you want to always see. So look at this reversal, boom, price started to move to the downside. Well, we have not even moved into the main, like the combination of entry itself. I wanted to talk from origin, continuation setup, and all of those things. So if you look at what this guy did, Abiola, let me show you. Yes. Let me hold on, guys. I hope we are not tired. I'm tired. Yes, daily and 4 hour kill. Now you are speaking the language I want to hear. Daily and 4 hour killer are very strong. So look at USDCHF now. Look at this. All of this drop that you are seeing that is happening on the 15 minutes. Are you seeing the same thing? Key level that got disrespected with an impulsive move to the end. Where did the storyline start from? Right? Let's just play with lower time frame a bit. We started from this open close, right? And look at this. This is move to the line chart. This is a V-shaped key level that got disrespected with an impulsive move to the downside. So let's say you want to still add some details. This is your internal range liquidity, right? So a key level that was disrespected with an impulsive move to the downside. That was where price came back to. That was where price came back to. It made a lot of sense for us. It made a lot of sense for us because we also engulfed here. Price came back. We could have been waiting for extreme. We could have been waiting for the extreme. So look at what look at this. Yes, yes, thank you. Thank you. So pay attention to just pay attention to what we have here. Just pay attention to what we have here. What can you even see, Seth? I've said it over and over again that even if you cannot build bias on the daily time frame, look for 4-hour breakout. When you just be able to spot now, we didn't even do anything on the daily, but look at USD CHF, right? All of these sales that is happening like this, all of these sales that is happening, look at where it started from. 4 hours breakout here. We had this 4-hour breakout here, right? We had this 4-hour breakout here. If you move to the line chart, you can see where the breakout happened from on the 4 hours time frame, right? So where did price come back to? Now, we have imbalances that needs to be rebalanced. We also have key levels. Point out all the key levels. Open close is here. 1. We have A-shaped key level that is resting here. Fresh is still there. Are we expecting a deep retracement? No. Why? We know that a condition has already been satisfied. A condition needs to be satisfied. Sweep of liquidity, rebalance of holding balance at a specific pricing level. Let's say overall, you now want to add premium and discount pricing. Look at this. Let's say you now add premium and discount pricing. What did you notice here? Right? If you just do a little bit of study, I don't know if I've touched the principle of premium and discount price, right? Look at this. Well, I don't want to complicate things. Look at this. 50% and above of this entire range is the premium price. 50% and below is the discount price. In a bearish market order flow, right? How do we know that we are bearish? We broke below this part. We had a breakout, not a break of structure. We had a breakout on the 4 hours time frame. We picked from this range high to this range low, right? 50% becomes our what? Equilibrium. 50% to above premium price, 50% and below discount price. What did you find in the premium pricing? We have our internal range liquidity that is resting here. We also have our imbalance that needs to be rebalanced, right? But because we know what we are doing, we don't need all these things, right? We are trying to keep it as simple as possible. I know like grammar. Look at what price did. We took out liquidity, played out from a 4-hour key level, right? Pay attention to this. Now, we're going to investigate what happened here. Remember what I said. I reiterated something that Dixon said playfully one day on the group. Dixon said a 4-hour week that is overlapping inside of an imbalance. When you move to a lower time frame, it becomes a key level that got disrespected. So this is still a 4 hours time frame. 2 conditions needs to be satisfied: sweep of liquidity, rebalancing of an old imbalance at a specific pricing level. Now, let's say you want to wait for confirmation entry set. Pay attention. What do you have here? When we started talking about entry models, what do you have here? Seats. Look at this. We have 2 consecutive candles to the upside that created an open close. The open close now has been disrespected. Now that the open close has been disrespected, what did you notice again? It engulfed and created a what? After the engulfing, what did it create? It created an V-shape, an A-shaped key level. Look at where price came back to. When the key level is, when the momentum is right, the key level will kick in. How not they talk for that group? Yes, Ghost said he uses it sometimes. That's beautiful too. Look at this. Let's say we have not even investigated what happened here. Look at the confirmation entry. It's patience. Patience. So context to your trading makes a lot of sense. The sense it makes now is that we have 2 things you need to see. This is even a continuation setup set. 2 things you need to see. Price needs to sweep liquidity and rebalance and hold imbalance. It makes a lot of sense when your key level is overlapping with an imbalance, right? Now look at what price did. Let's say you were skeptical of this type of trade because you are not sure where to put stop loss. But now price has tapped here on the 4 hours. Price has closed below. Price has closed below. And hold on. So price has closed below. What did you notice? Patience enough to be able to wait for your entry models. When we spoke about entry models, I told us 3 things, 3 types of entries that you are going to see using engulfing. Two consecutive candles to the upside is going to create an open close. Price broke below it. Look at where price came back to. Tapped into it. And look at this. So it satisfies your condition. Now, you know that the 4 hours order flow is to the downside. It satisfies your condition that price would move from internal range to external range. Look at this. From internal range to external range. From internal range to external range. Internal range to external range. Are we learning now? Are we learning? I'm telling you, that is why I see. I've said it over. I've said it over and over again that there's a level of understanding you will have about SLK. The only thing that will be on your chart, when you do your analysis, it is going to be your tool to pick your entry and your long or short tool to go for your to just show that you are in a trade. These two, just these two. When you begin to have a proper understanding, these are just the two things you will begin to see on your chart. Just these two. Just these two. Just these two. I'm serious. So let's come back to this 4 hours. But people like name, people like big things. I saw one trader's chart like that one time. So I see somebody's doing PhD. I was like, okay, so 4 hours overlapping with an imbalance, internal range liquidity is taken. So look at this. So that 4 hour week on the 1 hour time frame is a V-shaped key level, right? And that was, look at this. It's a V-shaped key level on the 1 hour. And you can see what price did. That was where price tapped into. Do you understand now? So that was the same place price tapped into, right? What did you notice here? So you can remember 4 hours gave to us an entry opportunity. So look at what 1 hour gave to us. Breakout, breakout, breakout. To be sure we are in sync. So this is a 4 hour rejection. This is a 1 hour. Now, for 1 hour, I must be in sync with the 4 hours. Am I right? Yes. So what did you notice here? Break of structure. Boom. We broke structure. So 1 hour now is in sync with the 4 hours. Did you notice that? Did you notice another breakout again? Yes. This is the next breakout. We broke out here. Now that we broke out there, what did you notice that price did? Created an impulsive move to the downside. We broke below, created an A-shaped key level. Can you see that we didn't come to a deep retracement anymore? Price came to play the nearest A-shaped key level, and price just continued to move to the downside. Are you seeing what I'm showing to you? I really want us to just show how we incorporate this thing together. So look at this. 4 hours time frame. Are you seeing what we saw when we see the breakout here? So you can see what we have here, right? We broke out here, right? After we broke out here, you can see the same thing that happened here. You can see the 4 hour break. Oh, we did not even do any special analysis on the 1 hour, on the daily 4 hour breakout. Look at this. This week is overlapping inside of an imbalance. Come to the 1 hour time frame. Let's just see how it is in sync. So the 4 hour week on the 1 hour time frame is a key level, right? Are you seeing now? So it made a lot of sense for us because we have a breakout on the 4 hours time frame. And that breakout on the 4 hours time frame give to us, we have look at this, the key level. This is the key level here. So you can see, did we have anything that made 1 hour time frame in sync? What's wrong with this thing? Let me take this out. Let me just use the proper one. Simple. So look at this. This is don't forget, we refined this 4 hour week to a 1 hour key level, a 1 hour V-shaped key level. It made a lot of sense for us because it is overlapping inside of an imbalance, right? So we want to ensure that 1 hour is in sync with the 4 hour. Look at this. What do we have on the 1 hour? Sweep, break. Order flow is to the upside. I told us for the break of structure to the left, the order flow will be to the upside. Then we had a break. So we had a sweep, we had a break. This is the break we had here, right? We had this break. So you can see the moment we had a sweep and a break, we knew that 1 hour is now in sync with the 4 hours. So we begin to look for entries here. Let's look for the nearest entry that was given. So when we begin to look for the entry here, so if you pay attention to it, two things would get you, which one should I play? Okay, we have this. You begin to ask yourself, which of the key level am I going to play? Extreme. We have this A-shaped key level to the extreme. And we also have this one here. Pay attention. 30 minutes time frame. Where is the breakout? The most recent breakout that happened. This is the most recent breakout that happened. Look out. See how for here. We had a breakout here. See how. The moment we broke out there, right? Look at where price came back to. Did it go beyond that? So even if you want to play this one, your stop loss is still going to be above the same high. Even if you play this place, your stop loss is still going to be above this same high, right? But because of the breakout we have on the 30 minutes, look at where price came back to play. Yeah, came back to that same breakout. And look at this. And price moves from internal range to what? External range. Are you seeing now? Are you seeing? Are we still together? Or maybe you guys, maybe you're tired already. You want to sleep or something. Just let me know. Okay. Okay. Dixon said I should leave PG. No problem. It's not for me. Do you get what I'm showing to you guys? So if you look at last week, there is no break on the 4 hours that is showing us that we want to go to any upside. There's no break on any 4 hours. There's no breakout anywhere. There's no breakout anywhere. We can begin to maybe look for buying opportunities now because look at these 4 hours now. Look at these 4 hours. You can see this is not just an engulfing. This is not just an engulfing that is happening here. This is the current price action. It's not just an engulfing. Look at it. Look at what price is doing here. This is a breakout. We have a sweep. We have a break. We also have another most recent breakout that has happened here already, right? So now we can begin to even consider to look for buying opportunities. But when you look at everything that is happening here, there's no breakout at all. So look at, I think these were the ones that Wale took. So the first one that Wale took for that day last week, I think it took 1 year. It took one around this area here. Then the second one is even very clear. Price tends to do two things. So the first thing you can identify is a breakout already on the 15 minutes. Everything is in sync with the 4 hours, right? So ideally, we want to only look for selling opportunities, right? Our most good setup, our best setup, key level that is overlapping inside of an imbalance. So you can see we had an engulfing here. Are you seeing what I'm saying? You can't use engulfing and after price breaks above an open close. You can't use it to determine a change in direction. If you go and build bias on the 15 minutes and you see an engulfing and where price broke above an open close, you go, so you can see what price did there. Internal key level that is overlapping inside of an imbalance, internal range liquidity that is being created. So price gave to us these two conditions of the marketplace: sweep of liquidity, rebalancing of an old imbalance at a specific prices. And we say whenever the key level is right, momentum will definitely kick in. Look at this. And this was for NFPO. This was for Friday. How many of us remember? And what did I say about trading news? I said every time news would always go in the direction of the higher time frame bias, right? It will always go in the direction of the higher time frame bias. Look at what price did. And this. And you can see how price